Small and medium-sized businesses should strongly consider purchasing key person life insurance and disability insurance for that key person in the organization that's generating revenues for the firm. They're the linchpin that the clients go to, the owners go to keep the business running smoothly. If anything happened to them, if they were to die or become severely disabled and couldn't contribute to the firm, it would severely economically impact the performance and the profitability of the company. So companies consider purchasing key person life and disability insurance to generate the capital to help replace them. Economists, experts indicate that to replace a key person linchpin in the organization, it takes anywhere from 4 times to 10 times their annual compensation to help in the onboarding process as well as the replacement of lost revenues. typically do is move funds to the insurance company, or that percentage to the insurance company. And instead of a dollar for dollar offset for long-term care expenses, they are leveraging through the insurance company. Instead of 1-to-1, they're receiving, instead of $1 to $1, they're receiving $1 to $3 or $4 or $5 or $6 even. So that creates great leverage of utilizing the insurance carrier. If they were to die and not use benefits, that what they put aside would be recovered by their beneficiaries at their death.
What is longevity planning, and how can it work in conjunction with my financial plan or Medicare?
Longevity planning is planning on how you want to age going forward in the future. Typically, people start looking at longevity planning in their 50s and later. And that is simply having conversations with their spouse, significant other, their partner, their financial advisor on how they plan to live the balance of their lives, whether they stay in their current home, what ramifications, financial ramifications take place with that, or do they want to move to a continuing care community? But it's important from a planning standpoint to have those conversations, especially with children. Children today could be spread out all over the country. Maybe they want to live near their child. But those are tough, challenging questions that need to be planned out and a part of the plan going forward. If they're not, and a triggering long-term care event occurs, it creates incredible stress, not just for the individual that's had the triggering event, but family members. Can be alleviated with proper planning that's connected with the financial plan. And good planning with aging is extremely important today as our population ages.
Why would a business need to fund their buy-sell agreement?
Businesses need to fund their buy-sell agreement because an agreement with no funding isn't going to accomplish the objectives that are set forth in the buy-sell agreement. Buy-sell agreements are drafted by the client's lawyers, and they specify certain points from premature death, disability, retirement, and they're all important. But if there's no cash or funding on the agreement, it's not going to accomplish the objectives. So companies look to life insurance, disability insurance to help fund their buy-sell agreements. So there's cash and liquidity to help purchase survivors' interest to keep the business running smoothly going forward. Okay.